Friends, I, Captain Vivek Jain, welcome you all to my 16th episode. In our earlier discussions, we have understood that fundamental analysis of any company is necessary to judge its financial strengths and weaknesses. Fundamental analysis also shows us the earning capacity of the company. It tells us the growth and development of the company's business in the past and gives us a good perspective of the future projections based on its product, market share, and other factors. Last but not least, it clearly depicts the reward that the company has provided for the owners, for all the owners, that is, for all the equity shareholders. And that means for you and me. We have also seen in our previous discussions the actual figures of important financial ratios and the balance sheet. Among the actual figures, what now remains to be seen and studied is the profit and loss account. We shall modify that slightly to income and expenses statement. In other words, results of the company that are published for general public annually and quarterly. And friends, that is what I shall show you and explain a few blue chip companies today. Now, what exactly is this income and expense statement? The income statement is a results-oriented report showing the net income or loss over a specified period. It lists the total revenues and expenses that occurred over the period, leading to a total calculation of how much money was ultimately gained or lost. Friends, I shall start with my presentation of income and expenses statement. The first company that I've chosen here, as you can see on your screen, is Dr. Reddys Laboratories Limited. It is a leading pharma company, there's no doubt about it. You can see the yearly results, which are shown here for 3 years, for 31st March 2018 ending till 31st March 2020 ending. The net sales is in the first row, which starts from 14,203 crores in 31st March ending 2018 and gradually increases, and the latest 31st March 2020 ending shows 17,460 crores. That, along with operating income, gives the total income from operations. It's quite reasonable that the company has been growing in the last 3 years at a good level. Then you come to the expenditure column, which you can see the various figures given over here. It may be of importance which figure you would like to see first and which one you would like to keep in your mind. In my opinion, you can see all of them that they should be in a gradually, reasonably expected mode. Depreciation is increasing also from March 18 to March 20 in a reasonable manner. Then we have total expenses given over here, which starts from 13,000 for March 18 till 16,210 crores out of the total income from operation that we have seen above. Gross profit is the difference between the total income and the total expenses, and it is shown over here. Exceptional items and extraordinary items are nil, which is quite acceptable. Sometimes the companies, they have some extraordinary item which they have sold or purchased, any exceptional item, then those figures are mentioned over here, but they are not a recurring factor as such. It happens in a particular year due to some reason. Net profit is very handsome, starts from 912 crores in March 18 ending, and it is increasing to 1970 crores in March 20, which is nearly double in a matter of two years from here, which is a very good growth which is being shown for Dr. Reddys Laboratories. After a little bit of an adjustment with shares and profit and loss of associates, the net profit shown is ranging from 947 till 2026 crores. Equity share capital of Dr. Reddy's is 83 crores. For your information, the face value is 5 rupees. Good amount of sizable reserves are there, which is accumulated over the years, and it all normally belongs to shareholders. The reserves with the equity capital is normally called shareholders funds, as you may have gathered from my earlier financial ratios and balance sheet discussions also. EPS from 57 goes to 118 and to 122, which is very, very good for this company, which has shown a remarkable growth over the last few years. For your information, the June 20 quarterly report was published. September 20 is still due to come. The June 20 quarterly report was having an EPS of 36 rupees. And mind you, June ending was during the COVID-19 lockdown period. If we take this also as a benchmark, we can expect that March 21 would be at least 144 rupees or so. We come to the second company, which is Infosys Limited, a leading company in information technology. You can see here, I have the details and the figures for 5 years, ranging from 31st March 2016 till 31st March 2020. The total income from operations is ranging from nearly 54,000 crores till 79,000 crores. That is a very good growth in a matter of 4 years for an information technology company. Then you have expenditure, various columns, various rows which are relevant are mentioned over here. Employees cost, depreciation, research and development expenses, other expenses, and the total expenses are shown here. The difference of total income and total expenses will come to gross profit, ranging from 14,500 to 17,900. You can see the other income here, then tax which has been paid to the government, and then we get the net profit. Net profit is very good, ranging from 12,693 coming to 15,543. Nearly 3,000 crores have been added or increased in net profit in a matter of 4 years. That's about 24-25% from March 16 level in 3-4 years, which is a very good indication for an IT company. Infosys equity share capital has been shown here. In between, they had given some buyback offers, due to which the equity capital changed a little bit. Then bonus of 1:1 was given in the year ending 31st March 2019, that doubled the equity share capital, and today it stands at nearly 2,129 crores. Good amount of reserves are there, which is a part of the shareholders fund. Equity dividend has been also very handsome, 485%, then 870% in March 18. After the bonus, it became 430% and 350%. EPS 55, 60, 71, and then due to the bonus, it becomes half and it is increasing. In March 2020 ending is 36. And Infosys had declared the September 20 quarterly result also recently. So the combined half-yearly result of June 20 and September ending amounts to 21 rupees 40 paise. That means in March 21, you can expect at least 42-43 rupees of EPS, which is much better than 36. That means the company is really growing and expanding. This is what we normally see in income and expenses statements. I come to the third company, which is a leading pharma FMCG, fast-moving consumer good, Britannia Industries Limited, and very well-known company, very popular company. Here also I have 5 columns ranging from 31st March 16 to 31st March 20. The total income from operations ranging from 8,400 crores to 11,600 crores. That is also very reasonable, very good, a good growth. Then we have expenditure column, consumption of raw materials, purchase of traded goods, and then employees cost, depreciation, which is also very reasonable and acceptable, and other expenses. Finally, we come to the total expenses from 7,296 to 9,941. The difference of this and income from operation would give you gross profit ranging from 1100 to 1658, nearly 50% rise in gross profit in 4 years, which is very good and very acceptable and showing a good growth of the company. Then the interest element is very minimal, except in March 2020 they had to resort to some interest. We will see in March 21 probably this will also hopefully decrease. Net profit is ranging from 824 to 1393, which is a very good figure, nearly 70% increase in 4 years, 75%, and that shows good growth path of the company. Equity share capital of Britannia Industries is 24 crores all along. In between, in year ending 31st March 2019, they had split the shares from face value 2 to face value 1. The reserves are also shown over here. And due to the splitting, the EPS has also been adjusted over here. 69, 74, 84, good growth of EPS over 3 years. Then due to the split, it becomes 48, which is actually 96 if you take face value 2. That's a very good growth. And then it becomes 58 and 31st March 2020, again depicting excellent growth. And Britannia Industries June quarter ending was also declared, and that EPS quarterly worked out to 22.69, which if annualized becomes nearly 90 rupees. From 58 to 90 is a very sizable growth, gentlemen. And this is what, friends, you'll have to probably appreciate, understand, and infer, and you can get good idea of the health of the company. So friends, I'm sure you must have clearly understood the income and expense statements explained. As you know, the famous and Nobel laureate physicist Albert Einstein taught us the theory of relativity. I suggest you all must search through all available resources and study the income expense statements of several other companies that you may be interested in. That will allow you to relatively compare one from the other and familiarize with the relevant figures readily. A complete fundamental analysis that we have discussed and understood so far will not only allow you to identify a good quality company, but also will let you decide with conviction and confidence which business venture to embark upon. And reminding you yet again, get into a business or businesses merely by purchasing its equity shares. Sit back, enjoy, watch, monitor, and with due patience reap the benefits. And all that without creating any other infrastructure. Friends, in our next discussion, I shall explain what is the intrinsic value of an equity share. Intrinsic value is the anticipated or calculated value of a company, and is also called the real value. And it may or may not be the same as the current market value. It gives you a good idea whether the share is underpriced, fully priced, or overpriced. So this aspect is very important, and I'm sure you all would like to know. Please wait for my next episode. Till then, let me remind you to ensure subscribe to this channel in case you have not done so as yet, and that will provide you with all earlier and future episodes easily on your screen. Do post your comments and queries, if any, to which I shall indeed reply. Friends, see you again soon, and have a nice day and happy investments.